Alright, so this is round two. Now I'm going to cover the buying and selling wave. So I covered judging the media trend and how to detect change in trend, when to buy, when to sell, when to exit, when to reverse. All that in the prior video. Now I'll cover the next section, which is buying and selling waves. Really important to understand this. This is Division 2, active trading with Wyckoff. But to be frank, this style can be applied on swing trading as well, or because all he's doing is just he divides the wave chart, and the wave chart just tells you trend. I mean, that's what it does, and that's what it's designed for, to be able to judge the immediate trend, see if it's up, down, sideways. And then the other reason is it teaches tape reading, because the wave chart is supposed to be combined with price, time, and volume, and another factor called activity, but that is very proprietary to Wyckoff style. So price, time, and volume are the three major pieces, and now we're going to cover this. So in the first division of the course, we presented part one on the use of wave chart. The material in part one discussed in somewhat greater detail the instructions set forth in the second division. Therefore, it may be substituted for the last named section, or you may remove part 1 and 2 and blah 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 blah. All he's saying is, in the part 1 of the course, this is division 2, so there's a division 1 which is swing trading, division 2 is day trading. Division 1, which is swing trading, he actually has a chapter on the wave chart. So this, he's just referring to it and saying, hey, you could take a look at it if you want. So now, in Division 1, when he goes over the wave chart, he focuses on price and time, but now he's going to bring in activity and volume. Alright, so this is like a little wave chart right here. There's the way you interpret this. Let me make this a little bit bigger. Alright, there you go. So I'll explain how to interpret this. First of all, there's period 1, period 2, period 3, period 4, period 5, 6, 7, 8, 9, and so on and so forth. So he's going to start talking about each period, meaning what's going on in terms of price and volume, and then pay attention to when he talks about taking a position. Alright, so that's what you got to do. Understand what's going on in each period. Each period here is nothing more than a swing. So the swing 1 up, swing 2 down, swing 3 up, swing 4 down, swings 5 up, swing 6 down. That's all he's doing. And then he's just talking about those periods, or swings, and then like what are some of the indications to be aware of. Alright, so in this illustration, it'll be seen that volume and activity both shrink on very small proportions on the little buying and selling waves from 10 o'clock and whatever. Before I go any further, notice now he's talking about volume and activity. Alright, in the prior example, where there was a study in Division 1, he used price and time. Okay, so he used price and time is one method. Instead of price and time, you can also use volume and activity. Now, many of y'all might use Weiss wave or wave volume. That has only volume on it. It does not have activity. So what is activity? Again, it's not easy for me to explain, because Wyckoff himself is kind of using it proprietarily, because he used to measure the length of the ticker tape in feet. So it's a whole lot of trades coming in. Now, some people say that, oh, this is tick volume. I'm not too sure of that, because Wyckoff never said it was the number of trades. He never said that. So how could you say it's tick volume? Anyway, he measured it based on feet. So we know that there's a lot of trades involved and all that. So I'm not going to go into all those details. All I'm going to do is compare and contrast using the Wyckoff wave with price and time versus what he's going to do now, which is volume and activity, and see in both cases how to buy and sell. All right. I actually like price and time because I think it's so easy. Volume and activity you don't have, so you're stuck with volume, and volume is a very tricky thing um, because of the concept of effort and time and all that. And also because if you're doing it intraday, then the volume kind of, certain periods have more volume than others and all that. So, and then if you're using forex, the shit doesn't even have volume, and you gotta like pay if you want combined volume, which by the way you can get from 10-4 using DT and IQ feed. They give you combined bank volume. Anyway, okay, where was I? The day starts with a small rally, which is promptly followed by a small dip. What does it mean? That means they're equal, right? So you're looking at how the day starts. If the buying wave is stronger than the selling wave, then you have, all right, an ability to go up, relative strength to the upside. But in this case, the period 1 and period 2, they match each other, which means there's no material strength, no relative strength on either side. As you can see, period 1 goes up, period 2 goes right back down, flat. Nothing. Alright, so bulls and bears are evidently well matched at this point. All he's saying is period 1 you see here, period 2 you see here. It looks like a arrowhead. It ain't do nothing. Alright. After the first dip, which is in period 2, right, the pullback here, the bulls try to go again, but they fail to attract the following. What is he talking about? He's talking about period 3. This is next swing up. So you have period 1 swings up, and period 2 swings all the way back down, and then period 3 tries to break out, but it does not attract the following. How is he determining whether he's attracting the following or not? Let me see if he says it over here. As shown by the failure of activity to increase. So again, he's using this term activity and doesn't really talk about it. I'll try to find like what he means by it. He's not very clear about activity. All right, but I can tell by the wave. Like, look at the wave. It's just testing. Just goes to the same resistance level. Now, if it was a sharper angle of ascent with volume, etc., so I bet activity would increase. So, demand peters out around 11 a.m. top. A small dip in the fourth period brings out very little stock on the downside. So it goes down. What is he saying? The swing down in the fourth, which is a pullback, has very little volume. It's a low volume pullback. So what do you know low volume pullback is bullish? Why? Because it's low volume on the pullback, small pullback. So what do you think the bulls are going to do? They're going to attempt again, and that's what they attempt to do in period 5, to go higher during period 5. Can they attract the following now? Can the activity increase with volume increases? That's the question. So a small dip in the fourth period brings out very little stock on the downside. However, this encourages the bulls to try again in period 5. So period 5 is another attempt. Why is the period 5 going up? Like, why does it go higher? Why? Because the pullback on 4 is weak, meaning bears are not able to pull back. They're not able to get stock to sell. The volume is low. All right, it's a low volume pullback. Anyway, so that's why the bulls are encouraged, and this is what you see all the time. Why do you think low volume pullbacks are part of most trading systems, or like why does it work? It works because it encourages the bulls to try again, because supply is weak on the pullback. Lack of supply in the pullback. What do you think is going to happen? Bulls are going to try to go again until the bulls are exhausted or they can't gain a following. Then there's going to be a turn. So this is what he's saying. And this is important because you have to understand that period 4 is responsible for the attempt in period 5. Meaning the low volume pullback in period 4 is responsible for the attempt at breaking out in period 5. You don't know if it's going to be successful in period 5, but you do know that the bulls are emboldened. Alright? A small dip in 4 brings out very little stock. However, this encourages the bulls. This is a really key point. They're encouraged by the low volume pullback on period 4. And that's the same case today. That happens all the time. Once more, they fail to attract the following. So they fail to attract the following in period 5 and in period 3, meaning they try and try and try to go up, but they are not being successful. In period 3, it was because of a lack of activity. Alright, in period 5 is probably the same reason. Note how the rally in period 5 dies around the prior two tops, meaning it doesn't thrust and go right through them. It goes around the two tops, looks like it's kind of testing or going slightly penetrating, but it's unable to really push right through. Okay, so this is their second attempt, all right, to break out and attract the following, but they're unable to do so like they did, like in period 3. Period 3 is similar to period 4 in that they both fail to attract the following and go further. So that's why they both just die out around resistance. So now, what do you think is going to happen if bulls are attempting and they fail the second time? Obviously, bears are going to try, right? Because one side is trying to capitalize on the other side's weakness. So in period 5, they try to do what? Capitalize on the weakness in period 4. Now in period 6, meaning the bears are going to try to capitalize on the weakness in period 5. They try to look for weakness, and based on that weakness they attempt and see if they can attract the following. If which any side, all right? When bulls are weak, the bears will attempt to move the market. When bears are weak, bulls come in to attempt to move the market, and they'll keep trying to play each other until one side succeeds. So now the bears endeavor to break the deadlock by shorting, by offering stocks down. This maneuver meets no better success. Activity fails to increase on the downside, however, and a tentatively bullish signal is given by the evidence of support by the low. All he's saying is goes to support. It's a tentative bullish signal because you're at support, not a full-blown bullish signal. You have to analyze the wave. So in period 6, it goes all the way down near the period 1 and 2. 6 goes to that support area. Let's see what happens at that support area. At this point, the market has come to a complete standstill. Everything now depends on the ability of one side or the other to rouse a following. Well, that's what they're doing. Weakness in one, the other side tries. Weakness in that other side, the bulls are trying again. Weakness in the bulls, the bears try. And bears try if there's weakness, bulls try. So they're just trying to play each other until they get a following. Now, what is meant by getting a following? Meaning activity is increasing, volume is increasing. That's what he's trying to make a point. What is activity? The clear definition is difficult to say. We know that it was measured in feet, meaning the tape ticker, and he measured it and gave it some proprietary calculation that he knows. I could also say, oh yeah, it's price and volume. Like, if I got a big strong wave with good volume, so that's also price and volume. But this is why there's a problem with because he's not. If someone tells you, oh, all you need is volume, right? Then ask yourself, why is Wyckoff using both volume and activity? Why doesn't he just use volume? Can anyone explain that? Like over here, he has volume and activity. Is he using volume by itself? No. So there you go. At this point, the market has complete standstill. Everything now depends on the ability of one side or other to route the following, either by breaking down support or by pushing prices through resistance. When the bears fail at 1 o'clock, what just happened? So all he's saying, they go to support. It's the bulls' turn now to try their strength. Why? Because the market's at support. This time demand is stronger, prices rise a little bit above previous highs, and activity increases a trifle as they advance. If we are trading for the short swings, this is our cue to prepare for action. If activity falls off on the next selling wave, we may do what? Go long? Expect the bulls to become aggressive. Why? So all he's saying is now the bulls tried and they broke out, and activity increased on the breakout. And if we are wanting to get in, this is the time to do so. If on the pullback, activity falls along with volume. So we Alright, activity dies out completely on the dip. This is the cue we've been waiting for. It tells us that the supply, which hold the bulls back on previous rallies, had been absorbed on the earlier reactions. So all he's saying is that, oh yeah, we got a low volume pullback. What does that mean? It means the supply was absorbed in the prior pullbacks, because this is like multiple pullbacks now. So if it's low volume, it means the supply is lack of supply. It's lacking, or lack of supply. Therefore, we step in and buy. So all he's saying is it breaks out with volume, activity, and now buy. And it just goes up. Okay, so the question really is here, why did he buy? Well, for one thing, it broke out and it tested on a low volume pullback. But the second thing is it's this other factor of activity. Now, a lot, people who know this stuff will say that yeah, you can use tick volume, but I'm not convinced. Tick volume and regular volume. And again, my reasoning is he's not just saying just look at the number of trades. So evidently the supply also, she had a few offerings. So now what happens? Evidently this supply also has been disposed of because activity shrinks. Every time it shrinks on the pullback, it's bullish. And this is just kind of like volume, because volume should also shrink on the pullback. So anyway, consider, alright, in this, an example on page 7, part 1, we may have considered the wave chart's usefulness primarily from the standpoint of short swings. For your analysis of the intermediate and longer term movements, you will find it helpful to construct a 1-point figure chart from the tape reading. This will permit you to bring all the principles together. So he says, if you want to use this for swing trading, you can, but you really should use the figure chart, and in particular 1-point figure chart he mentions. Alright, so, and this is for swing trading, because one of the things that he's trying to do is he uses the wave for intraday work and the bar chart for daily. And when he sees an opportunity, he looks intraday and sees, okay, is there an opportunity? And let me use the the wave chart to see if there's a turning point, and as soon as there's a turning point, just get in. So it's just that same higher time frame, lower time frame, but in this case, it's a lower time frame with a wave chart and a higher time frame with a bar chart, and using the lower time frame for timing his entries, right? And everyone knows that obviously Wyckoff also used point and figure, so that's why he's mentioning use point and figure, bring your 1 point figure chart, and voila, there you go. Now 1 point figure chart of 5 sensitive leaders, there it is. So 5 leaders, so he's just using the the leading markets that have the ability to influence the stock, excuse me, the market. So it's just a wave. um, the wave chart is supposed to be made up of your 5 leading whatever stocks. So this is just a 1 point figure chart. You could do this very easily with large charting platforms nowadays. You don't have to like make it rocket science. So um, and what's he mentioning here? Okay, he has the supply line and this. I'm not too crazy about the lines because I've seen a lot of folks use lines and they just lose everything else and get lost in the lines. So as you see over here, yeah, you can use lines on point and figure. Someone had once said that you cannot use lines on point and figure because the element of time is not on point and figure, and trend lines should not be used on point and figure because there's no time factor. Obviously, you see that's not the case, as Wyckoff used point and figure and trend lines. Just clearly see that. So this thing is going down. You have a support line and you have a supply line or resistance line or whatever you want to call it, and eventually this is your zone of temporary support and whatever and whatever and whatever. So I don't want to go into how to read a point figure chart. I think I've already gone into a prior video. I might do it again. Maybe. You have to be very careful with too many lines. You won't be able to understand it, because if you start drawing horizontal lines also, it gets really messy. The problem with these lines is there are too many of them. You have horizontal support resistance, then the trend lines, and the trend lines also change in terms of their slope. So there's like one line that's going at say 30 degrees and another line at 45 degrees, and trying to capture the speed, and it'll make your chart look like a mess, and you're going to lose the focus on things that have to do with the bars as well as volume. That's what happens. And where was I? I wonder if this was done by, yeah, I guess it was done by Wyckoff. I guess he liked the lines. Right there. See this local supply line? This is what I'm talking about. You got, when you start having too many lines, so you have the top line and the bottom line right here, then you start doing what's called local supply line, which is just another line. So this not good. And try it for yourself and you see what I'm talking about. So here you have a penetration of that line. Penetration of small, it's a small penetration of light volume. So that's a technical rally. right? But here, this must be a preliminary signal, must be more volume here. Because when it broke that line, it must have had more volume. Otherwise, he would have mentioned that it was technical. Technical rallies tend to have low volume. Anyway, I'm not too crazy about this, so let's just continue. Where am I? Alright, so the wave chart with the stock you're trading it. Now, if you're using a wave chart, it might be of the 5 leaders. You know, what else can you do with it? You kind of compare one stock to the wave chart, things like that. So I think I'll go into this. It's easy, so I'll do it right now. The wave chart being based on the notion of the 5 leading active stock is complete in itself. If you wish to trade all 5 at once and whenever a turn is indicated, you can do that. Meaning this is complete. Alright. You don't need to go out and look for another stock. You just trade the damn wave chart because it's complete in itself. But in the beginning, it is best to trade in only one stock. So he's thinking, alright, you have 5 stocks and you created a wave chart of those 5 stocks. Now you have an option. You can take a look at the wave chart and based on the wave chart trade all 5 stocks at the same time, or in the beginning trade one of those stocks that mirrors the 5 leaders. As you can see, close follows the 5 leaders. Okay. When you find a stock, study closely its behavior under all conditions, which is the character of its manipulation. During the study period, this is what I want to point out. Like, this is another problem because you kind of have to know the stock. Whatever you're trading, you have to know it. So he calls it a study period. And the point of the study period is for you to learn its mannerisms. Meaning some stocks, they're more volatile. They have more springs and upthrusts. They have more shakeouts. They have their trend is like totally different. Other stocks have better trend, but they might not be as volatile, or if you compare, for example, the S&P with the Dow, even though they're supposedly so closely correlated, if you take a look at the futures, the Dow feels much easier because when it rallies, it pulls back much nicer and less shakeouts than the S&P. That's what I noticed. So anyway, the point is just know what you're trading. Any and all these will aid you in becoming acquainted. You have to become acquainted, and it's not easy. So you can't just randomly take stuff and trade it. Like in the beginning of the day, do a scan, and you see 10 stocks with the highest percentage gainers, and then you're gonna try to. You see that on YouTube. That's not easy to do because their mannerisms are different. So, long story short, you got to know the markets you're trading. Whether for study or actual practice, plot its moves on the wave chart. The price scale of the stock should be entered on the right side. Now study the actions of one stock in combination with the change in the media trend. He's telling you don't just trade it, study it. You may find that it is changing its trend exactly when the average changes. So just compare like Apple to NASDAQ or something like that. If this continues, you will know just when to buy and sell it. But you will find it's working exactly the opposite when the wave chart turns upward and your stock begins to get weak. Trade accordingly. What you see in the wave chart is supply and demand. That's right, the working out of supply and demand. Designed for me for this very purpose, to help you get profits out of trading from the tape. Alright? This last one's important. Now that you have the idea, it depends on the amount of study and practice you put in it. What you see on the wave chart is the working out of supply and demand. That's what you see. And what does he mean by that? There's a lot I can, but make a long story short, you have a rally and you have a pullback. What is that? That's demand followed by supply. The rally is an expression of demand. The pullback is an expression of supply. What else is there? You have price, volume, and time. These are the factors of supply and demand. Understanding the factors of supply and demand and seeing their expression in the terms of a rally which has a quantified amount of price, volume, and time, and then a pullback which has a quantified amount of price, volume, and time, allows you to quantify demand and supply. Alright? And he designed this for this very purpose so you can make money. Alright, that's very good. Trading areas and how to profit, I'll go through that tomorrow or whenever. Here's some points to remember though. The key points are you have a wave chart, you can use price and time, or you have a wave chart, you can use volume and activity. Some folks, or many just use volume, and that's fine also. But what he's showing, what Wyckoff is showing, volume and activity, or price and time. You can also have price and time like labeled, and then underneath that have wave volume. So you have price, time, and volume. Whatever you use is kind of up to you. But there's no rule that says, oh, this wave chart can only have volume. There's no such thing. Original wave chart had price and time. What do I mean by price and time? The number of points it moves up is price. Time is the number of minutes. So you have a rally, it goes up 3 points in 15 minutes. You have a pullback, goes down 1 point in 5 minutes. What's going to happen? Demand is stronger than supply. Demand is going to attempt to rally again. So this is price and time. You can add the additional factor of volume by using wave volume or Weiss wave or anything like that. Just add it, and now that's one style. Or you could just have price and time, which is what Wyckoff did initially to make things simple, and then he used volume and activity. So the activity thing, I don't know how you're going to do it other than trying to use volume with a tick or something like that, like one pane with volume, the other with tick volume. I really don't know. That's why most people don't use activity, because it was proprietary, and what you'll usually see is just volume. Alright? But I think, in my opinion, activity is very similar to volume in that, from one angle, the rallies are supposed to have increasing volume, just like they're supposed to have an increase in activity. The pullbacks are supposed to have decreasing volume, just like they have decreasing activity. So from that angle, the problem with using volume by itself is you can have a lot of, what the fuck? Anyway, the problem with using a volume by itself is it can mean something totally different. Meaning you can have a rally with a lot of volume that is very bearish because there's a lack of activity, or there's a lack of price movement creating an effort reward situation, and that's why people get confused with volume. So volume is a little tricky. It's better to figure out how to um, I guess you just get used to it. Anyway, all right, thank you all, and I'll go over this tomorrow, um, which is